While we are talking about GST, lots of announcements coming in from the PM, even other than GST, that could be boosting consumption. But yes, all the focus is on GST and the categories that are going to be affected the most, like consumer durables, like white goods that are currently taxed much higher at 28%. They could be moving lower to that 18% slab. So what does this entire rate rationalization mean for GST? And apart from that, also, when the PM announced the need for indigenous defense equipment, how could that affect some of the stocks in the sector? What lies ahead on both of these fronts? Let's discuss this and much more with Mr. Amnish Agarwal, Head of Research at PL Capital. And Amnish, hi, morning, and thanks so much for your time this morning. First up, let's start from the consumption front and help us understand which categories, in your view, stand to gain the most if GST on items like ACs, refrigerators, ghee, for instance, is reduced, and how meaningful could this boost actually be for consumption demand?
Hi, good morning. So I think a lot depends on how the government merges the various brackets. But the understanding so far has been that today we are having slabs of 5%, 12%, 18%, and 20%, which are basically, you can say, the slabs, plus we have got the compensations as on the goods which are considered the same goods or the luxury goods. Now, in this, what we are understanding is that a lot of items which currently are at 12%, they are likely to move to 5%. So it will include a lot of, you can say, consumption items, large items in the processed foods, etc., which will move in there. The second slab is that of 18%, and now taking the items straightway from 18% to 5% is not going to be easy because of the revenue considerations. However, some items from 18% still may go to 5%, and we also don't rule out that for the purpose of balancing, some items which are currently at 12% might also see some bit of jump happening to 18%. But in general, the daily use items will see the reduction in the GST rates, and that will be the bracket which is more at 12%. Now, coming to goods which are at 28%, which includes cement, which includes auto, which includes your white goods and durables. Now, in case of the durables, also items like AC, refrigerators, etc., which are at 28%, there is a probability of reduction happening there to, you can say, 18%. But the ones which are at 18% might not see much of a difference. Similarly, now what exactly happens with auto, how they categorize it, even among, you can say, two-wheelers, some of them, you can say, whether they categorized it by, you can say, CC, what happens to cars, whether you can say the SUVs, etc., they continue to be taxed at, say, you can say, your GST plus compensation says subsumed might be, say, 35-40%, or you can say they also get categorized into entry level cars and all. So these are some of the questions to which today we don't have answers. But in general, the government's aim is to reduce the burden on the common man. So which gives you an indication that the items which are today of the daily use items, the smaller items, so they are definitely likely to give some benefit to the consumer.
That's right, Amnish. Big announcement on one side, but the second important thing is how will the companies pass on all of these benefits to the eventual consumers? We'll take that view also from you. But then joining with us is Chandan Taparia from Motilal Oswal. Chandan, good morning. Thank you for joining with ET Now. Mansi this side, and we have seen a lot of development over the weekend. Of course, it was a truncated week, but then GST rate rationalization one, and also the global front. And at present, while we talk, the GIFT Nifty implied indications are all positive for the domestic markets. What's your view for the market and the levels in particular while the markets open up today?
Good morning, Mansi. Thanks for having me. So yes, in the last week, Nifty managed to close positive after the decline of last 6 weeks. And the good part is on daily chart, the index has been forming higher lows from last 4-5 trading sessions, and supports are already shifting higher. And today it is negating the lower top, lower bottom. And the good part is that PM announced the GST reform on Independence Day. That could give the trigger for the short covering rally as well. And technically the negation of the lower top, lower bottom, which is going to happen today, might give the positive momentum. So I believe any positive stance could trigger the short covering rally. As of now, 24,442 is major support, and with this support, the ongoing rally could extend to us 25,000 and plus. If I look at the entire corrective move, The index has seen a correction from 25,669 to 24,334. That is almost 1332 points. And 50% retracement comes near 25,000, and that is the logical level as of now for Nifty index. Similarly, if you talk about the bank Nifty, that got stuck in a range between 55,000 to 55,555, and opening above 55,555 could give the negation of lower top, lower bottom. So hold above the same could drive the momentum towards 56,500 to 57,000. So expecting both the indices to negate the lower top, lower bottom, and short covering rally could trigger in both the indices led by broad-based buying in the market.
Okay, so that's the take on that. Chandan, we'll come to you for your view on Nifty FMCG too, since a lot of this GST rate rationalization is to do with FMCG, and we're expecting a major boost over there. But on that note, Amnish, just want to get your sense on how much, like Mansi was mentioning earlier, how much of this benefit do you expect companies to pass on to the consumers versus how much of it could be held back to retain margins, and which sectors do you think may use it more for profitability cushion rather than price cuts?
Because if you look at the past history and how the regulations of the government have been in the past, so the companies will have to actually pass on the benefit to the consumer within a well-defined time frame. So there is very little probability, or there is no probability that the companies will not pass on the benefit to the consumers. Yes, over a period of time, I think if there's a boost to volumes, they will gain from that. That is one. And secondly, over a period of time, it gives you some sort of a leeway if there is an inflation to increase the prices. But definitely, I would say that the companies will have to pass on the duty cuts, the GST rate cuts, if it happens to the consumers.
Okay, Amnish, thanks for that view.
But 300 points up in the green right now, getting closer to that 25,000 mark. And we're still in conversation with Amnish Agarwal from PL Capital, and we've got Chandan Tapadia as well on the show still. But Chandan, just wanted to understand how meaningful could the move today be in some of the FMCG and white goods stocks?
So yes, I believe the today's movement is going to be a key trigger for the Indian markets, because earlier we noticed that market declined by around 1330 points and corrected from higher levels, and now it is negating the lower top, lower bottom, which could probably lead to the next leg of rally. And I believe if buying happens, that could be the broad base. And talking about Nifty FMCG, which has been consolidating and witnessed a corrective move from last couple of weeks, may find some support based buying. And the good part is some short covering trigger could be there. We have noticed that FMCG index has been finding multiple support near 54,250 to 54,500 mark. And support based buying could lead this index towards 56,500 to 57,000. That roughly 3 to 5% from current level in the index point of view. And because of that, consumption theme could do well, and counter like Asian Paint can see the next leg of rally apart from buying in counter like Britannia, Nestle, HUL and all.
So that's the take. And of course, the Chandan, all eyes are going to be on some of these FMCG staples like you just mentioned, also white goods, some auto stocks, anything related to consumption is going to be very important to watch out for. But Amnish, on that note, while we were talking about lower GST, and the aim over here, the entire aim of this exercise is to boost demand. How much of this do you think can actually trigger a meaningful release for the pent-up demand that we've seen for the aspirational goods like durables and apparels, because we still don't have more clarity on that front?
You see, a lot will depend upon how much is the change in the taxes. So that is one. But having said that, one needs to look at it from two angles. One is the real reduction in the prices. So for example, if something moves from 12% to 5%, then the practical change in the price might not be more than say 3%, 3.5% at max. But the real difference comes in the overall sentiments. Yes, in case of durables or some of the slightly expensive items, if there is a tax reduction, the benefits could be more. But the aim here is to provide support to, you can say, domestic consumption and also to the domestic manufacturing. So I think the aim here is, I would say that it is not going to, you can say, significantly change the pricing, but the sentiment overall changes. And in an environment where the inflation is low, where food inflation is now on the negative side, and what we have seen during the past when there used to be, you can say, any reduction in the rates of excise duty or when the GST was introduced, some rationalization happened. So it brings more and more people into the organized fold. It actually boosts the consumption overall, and also you can say it helps the larger brands and big corporates. So from that angle, I think it could be significant.
Okay, interesting. The other very interesting development over the weekend has also been what's coming out of the steel industry. And the Commerce Ministry's arm, DGTR, has recommended a final imposition of a safeguard duty on imports of certain flat steel products for the next 3 years. Now, the move is going to come into effect to protect domestic manufacturers from the sudden jump in the inbound shipments that they are witnessing. Prakash Priyadarshi, my colleague, once again is back with us for all the details on this. Prakash?
It's a very significant development coming in. In fact, a big relief expected for domestic steel players as the safeguard duty on steel imports likely to be continued. In fact, DGTR has made recommendations to the Finance Ministry based on its final investigation report. It says that the safeguard duty on steel imports should be levied for 3 years. A very significant development coming in. As per the recommendations, it should be 12% in the first year, 11.5% in the second year, and 11% in the third year. So as per the recommendation, duty should be levied in a staggered manner. In fact, a big relief coming in, considering the fact that there are several incidents where we are seeing huge dumping in the country, and the DGTR has, in fact, confirmed these cases. And based on its final investigation report, final recommendations had been sent to the Finance Ministry. Along with that, this duty will be applicable on various countries such as China, Vietnam, and Nepal as well. The government had already imposed a 12% safeguard duty on steel imports for 200 days. It's a provisional duty, but now final investigation report has come from DGTR. It had been sent to the Finance Ministry, and the Finance Ministry will have to take the final call on the proposal. Back to you.
Okay, Prakash, thanks for taking us through all of those details. So the steel safeguard duty is in the talks to be extended for a period of 3 more years. So sentimentally looks positive for some of these domestic steel manufacturers today. Chandan, want your view on that? What are you making of some of these names like Tata Steel, JSW Steel, Jindal Steel on the charts? How are some of these steel stocks shaping up? Because of late, when we've seen momentum in Nifty Metal, it's actually been these steel stocks that are swinging on either ends compared to your copper or other metals. So what's your take on this front? How are they shaping up on the charts?
So Nifty Metal has been moving in a range where multiple supports are intact. However, earlier when market was moving in a range, the same sector was moving in a range as well. So, but looking at the stock specific, Tata Steel has been consolidating, but multiple supports are visible near 150. So I believe with support of 150, it can head towards 162 to 165. Talking about JSW Steel, one of the strongest name which has been moving in a range. Multiple supports are visible near 1020, and this time it can see a breakout towards 1080 to 1100 kind of level. So I believe most of the metal counter which are moving in a range, as broader market is inching upwards, so buying trigger or short covering trigger could be seen in counters.
Amnish, the other thing that, the Prime Minister spoke about in his Independence Day speech was once again the focus on made in India, indigenous defense equipments. Now, we all know the defense structurally is a great story, but in the very near term, given that valuations also are pretty toppish in the sector, how would you, sort of recommend investors approach defense stocks right now? And which are your top picks or maybe bottom-up stories that you're looking at right now?
So, as you rightly said, the defense stocks have seen a big run-up, particularly in the past few months. However, we need to look at defense in a slightly different way. In case of defense, the orders are always bundled. And there are a few, and most of the large stocks in defense which are listed, they are actually the PSUs. But we need to look at what is today the intent of the government. Say, for example, when it comes to you can say Mission Sudarshan Chakra. So it will involve a lot of, you can say, incremental orders coming for companies like, say, for example, Bharat Electronics or something like a BDL. So if you look into sort of fine prints now, the focus in future is going to be in boosting your air power. That is one, on you can say whether it is aircraft and all. The second one is on the missile systems, air defense systems, that is second. And the third, which is not actually covered in this, is also going to be on the naval side. But now focusing specifically on these two, I think the companies like Bharat Electronics, I think this is one stock which we like. It is in a sweet spot because it practically caters to the defense electronic requirements for whether it is Navy, Air Force, you can say any segment you look at. So this is going to be, I would say, a structural play for the longer term. The second one could be Hindustan Aeronautics, which, for example, the government is now emphasizing a lot on development of indigenous, you can say, jet engine, you can say more requirement of fighter planes because we are already down to 31 squadrons and there is much more need to boost up the number of planes in India. The third could be Bharat Dynamics, which clearly looks at, you can say, development of many of the missile systems and all. So I think these are the three where you can say the direct linkage to you can say what the PM said on the Independence Day. So I would say that given the valuation that which sector is trading at, one needs to, you can say, buy them on dips. But definitely this is one sector where the visibility of growth for the next few years remains very strong.
Okay. Amnish, always great to have you on the show. Thanks for your time today. Let me take the conversation forward and let's talk